as a loan officer, my responsibility is to make sure that you understand what the process entails. Victor's responsibility is to make sure that you continue to be motivated in this market.
Literally could not be further ends of Miami to enjoy things that are just absurd. Most people don't know or enjoy. That just shows you the versatility that Miami has.
Within 30 minutes of each other, you literally have the suburbs, you have the coastline, the beaches, and you have farms, like legitimate farms. Where else can you do that? I don't know of anywhere else you can do that.
We're live. Our first ever office hours, tips for first-time home buyers, people who are looking to buy next year. I saw what you were doing for the community and the realtors out there, and all your content is always on point and timely. So I said, man, who better to talk about mortgages with, where we see rates going.
This is the third or fourth consecutive time we haven't raised rates. We have a responsibility, right? Especially in our market specifically, because our market is very unique.
What I want to do is prepare people for 2024 who may be interested in buying. I start every process with sending my client to get pre-approved.
You have credit, you have assets, you have liabilities, and you have income. We're talking about credit score. We're talking about assets, not only for down payment, but also for reserves, things that you might have in like a 401k, gifts from a relative, insurance policies that have cash value. Liabilities, honestly, is just anything that shows up in your credit report. If you have any alimony payments, if you have any child support payments. Flip side of that is income, retirement income, social security income, disability income, W-2s, commission, overtime, bonus. Is it just straight salary if you're self-employed? I'm asking pointed questions when I have my interviews with clients. I never take an application over the phone. Not only do I have a better understanding of your situation, but you as a client have a better understanding of how I operate, how I work. We want to keep that steady flow of credit, assets, liabilities, and income, because that's going to keep us honest in the grand scheme of things.
Exactly why I start with the pre-approval process. How much does one really need for a down payment?
The affordability disparity is widening every single year, so it just makes it that much harder to attain self-sufficiency. Banks created this illusion that 20% was the minimum that you had to put into a transaction. Believe it or not, the minimum is actually 3% if you're a first-time home buyer. 5 is where you get the most benefit from private mortgage insurance. Most VA loans don't require down payment. You want to keep at least half of the multiple of your down payment to one multiple of your down payment. If you're putting down to 3.5, you want to match it somewhere between 3 and 3.5.
So the programs that you were constantly informing us about was about Hometown Heroes. Can you tell everybody about this program and other programs that are like it?
It was only for first responders. The occupations list was extremely detailed. You had massage therapists, physical therapists. The list was so broad. It's phenomenal interest rate. Now it's 5% with a minimum of $10,000, meaning that any loans under $200,000, you still get the $10,000 benefit. But then they sweetened the deal. And what they did was they made it so that they weren't charging tangible tax for first-time home buyers that were using the Hometown Heroes program. That led me to kind of be less critical about other programs in Dade County. Depending on your annual income and your median income, you're going to get anywhere from like $14,000 to $24,000. They look at your household size. They look at your net AMI, which is your area median income. Broward County has pretty generous ones. They have up to $50,000 for most counties.
You can house hack on the way in and use your first-time home buyer into a duplex, a triplex, a quad. We have one of our mutual clients working on right now. In 6 months, a year, you can refinance it out to build generational wealth. For those of you who are brave and looking to do deals right now, you're going to thank us if you actually go forward with something here. I think it's going to be some of the best opportunities to buy while the market stabilizes slowly. They're just sitting on the sidelines. They're just waiting. It's an election year. And I totally get that too. But if you're taking calculated risks and buying certain assets that have value add opportunities, I'm okay with buying. By the time things get better, I'll be able to pull the cash out if I did things right. I can help you buy anything, anywhere. That ain't a problem. Now, I can help you sell, or I can be your lawyer in the state of Florida. But if you guys are looking to buy something and it's something that requires us to fly out to wherever, I'm there. Hey, Will, how much house can I afford?
That's great. That's a great question. You're going to have your want of affordability or your want of what's out in the market, and then you're going to have your need of keeping within a budget. Where do you want to be as far as monthly payment is concerned? If you have a $1,500 budget for your all-in monthly payment, you can't go out and expect that you're going to be able to, buy a $500,000 property. It just doesn't work that way. There's a disparity between expectations and reality. Where would you need to be in order for you and your family to comfortably sleep at night? 5 out of 10 people don't even know what that answer is. If you want a 3-bedroom in Coral Gables, but you are expecting that the monthly payment is going to be like a 3-bedroom in Port St. Lucie, there's a huge disparity. You're never going to know what you can truly qualify for. That number can be so different between different properties that it's so important to make sure that you understand why the pre-approval process is important. There's not a single mortgage application that exists in the United States that asks the one simple question that everybody cares about, which is how much do you want to spend every month? This is where you need to be if we want to stay at your budget of, say, $2,000, but you can qualify and go up to, say, $4,000 comfortably on paper. And the simple math is we're always going to take whatever your gross income is, and we're going to basically take a factor of that and minus whatever shows up on your credit report, and you're left with that as your total expendable monthly payment. You make $100,000 a year. Conventional loans going to allow us to go up to 50% of that. So we use $50,000 as a net number. You divide that by 12, you're going to be somewhere in the neighborhood of like 4,000 some odd dollars, right? For your entire housing expense and your overall monthly expenses.
But I think having an insurance agent as well. Talk about how rates are going up. That's going to affect Floridians, especially condo owners, in the years to come. It's a direct result of the Champlain Towers collapse. A lot more stringent rules to ensure that something like the Champlain Towers collapse never happens again. Unfortunately, what that does to all the condo owners is condo prices are going to come down.
Condo associations, boards, presidents, board members, probably the most political regime that exists, right? If a building doesn't collect enough reserves and they have a requisite to do it, you're probably going to pay, because now state of Florida is going to require anybody who's going to finance in that building to bring 25% down. So you just shrunk a large margin of the people that can potentially buy. 70% condo purchases are done with conventional loans. An issue that's been prevalent, and it's going to, I think, continue to be prevalent, is higher hurricane deductibles for these master insurance policies.
I still think you can get pretty good dollar for your sales right now. As a condo owner, I am myself am thinking about, trading maybe my condo for a different type of asset.
If you take the first subset, which is the first-time home buyers that are single or have no childcare expenses, those are the buyers that potentially have the biggest opportunity to leverage going into a single family, but not enough people are talking about this. Rather than put 25% down on a condo, it's a limited approved condo, turn that 25 into a 5% on a multifamily. You still get income off of it, and you can build wealth like you mentioned earlier. You're pre-approved, you know what the numbers are, you know what the cash close is, now what? And that's where you come into play.
Right now is a really good time to be talking to lenders like Will and your tax professionals to prepare for what you're looking to buy. You got to take action now. The more you sit on the sideline, the higher things are going to get.
I think selling is a real catalyst right now to buying.
When rates come down, prices are going to take off again. Thanks again, my friend.
All right,
We'll talk soon.
you got it.